Hey everyone, this is Andrew. Welcome to Atomo. I'm going to try to put two videos out tonight. It is April 26th. In this video, I want to talk a little bit about BlackRock. BlackRock, as you know, is a asset company, significantly big asset company as far as assets under management. We're looking at I'm trying to run some numbers here, and of course, I don't have the full range of research, but one of the numbers coming up is saying about $9 trillion of assets under management, and then what running about a $52 billion with a B operating budget. So, yeah, and I'm also trying to weave in a bit about, well, how does the impact of ESGs work through the BlackRock system? So I was digging away, trying to get a little bit more information that I didn't quite know about BlackRock before and doing some research on that. And I'm trying to determine here, well, should or should not BlackRock be, may it say, how do you say in kind of the Oxford starting off a debate, be it resolved that BlackRock should be anointed a systemically important financial institution, or whatever that nomenclature is for these important financial institutions that have there's a systemic risk, like just say JP Morgan, for example, would be a significant financially or strategically important financial institution. If JP Morgan were to go down, there'd be a lot of things that would get torn down as it went down. But what about something like BlackRock? And here's the thought that we're entering a bit of an unprecedented era, potentially recessionary, hopefully not depressionary, but also with the extreme rise in interest rates, that can have a significant impact on the assets under management in BlackRock, especially as loans start to get into the renewal cycle. Then what needs to happen is the loans will have to be renewed at higher rates, especially for commercial real estate, that after the pandemic, because of the brainchilds that were running our government, deciding that lockdowns and all this other stuff, that because of some flawed modeling and then a little bit of mass formation that was going on top of that, and everybody getting so fearful of risk that they all decided to collectively ostrich head in the sand. I'm talking about the people who we vote into office, unfortunately, or sometimes not vote, depending on, and no financial advice here, no medical advice, and I stay away from election fornification stuff as well, so I won't go down that train of thought that I was thinking of going down. You can connect your own dots and do your own research, just because of, the policing of these platforms in which we talk on sometimes doesn't lend ourselves to have the true, open, and honest conversations. So, BlackRock, with its $9 trillion under asset, potentially hitting a squeeze due to commercial real estate, is it possible that Janet Yellen's going to pull a fast one, create BlackRock as one of these systemically important financial institutions? And should it blow up, well, you know what they say, capitalize on the profit, socialize on the losses. And if BlackRock is a tumbling house of cards, knives all the way down, why not put it into the financial account of the United States? And if these assets under management start to pop, socialize the losses. That's going to get the Federal Reserve to print, will it not? What a good way to get them to print. Well, you could either go to war, but going to war at the theater right now is Ukraine, and well, the other side has nuclear weapons. So, if you really want to pull that stunt, then all Pooty Poot has to do is just target some American oligarch yachts, and that will send them screaming. Because hey, if you really want to do something, if you really want to get the creatures over here in the collective West to listen, target their toys. That's all they care about. They just want their toys. So if you take away their toys, they're going to scream like a toddler. Because projection through what is it? Confession through projection. You saw what the sanctions did. What after all those oligarchs? Well, thanks for doing Pooty Poot and a good thing. He doesn't want the oligarchs around, potentially telling him what to do. He's a patriotic federalist. He'll federalize everything. But anyhow, I'm digressing down that path. Back to the BlackRock. So if you got BlackRock tumbling down, potentially, allegedly, I'm not suggesting that it does or anything, and just kind of throwing ideas out here. So that's what we do in this podcast. So if they're going to fall apart and the assets under management is going to have to take a haircut, and heaven forbid they go to the discount window for that, they're not going to take a haircut. They're going to try to socialize those losses. So there's that angle that we potentially could see play out in the coming fight for the debt ceiling, and throwing BlackRock as a kind of financial weapon of mass destruction. Just make it a systemically important organization that you're going to bail out should it come that the fact that they're going to fall apart. And will the Fed printing press have to go burr in order to protect that? Possibly. It's just conjecture on my part. I'm just throwing ideas out there. So there's that. But the other thing that, as I was doing this research, that I realized is that, well, BlackRock does have a sort of proprietary trading system. And they have a network of organizations. So if you are a fund manager, you can actually get onto BlackRock's Aladdin system. And Aladdin's not like Genie and rubbing the tin. What does BlackRock? So BlackRock stands for, it's an acronym for Asset, Liability, Debt, and Derivative Investment Network. I did not know that this existed. I was just looking to see what the heck's going on with BlackRock, and they have a whole proprietary system for you as an asset manager to basically build a portfolio. So if just say you got a few $1 billion that you want to kind of wager on into the big casino, because of course if you're a pension company and you need to pay pensions, I need to get a certain amount of yield. My thing clicked off. All right. So if you want to get a particular amount of yield, well, then what you can do with this system is you can plug in the configuration in a way that you want to allocate that money. Now, if the heavy foot of ESG, environmental, social, and governance, is on top of you, and you want to have a particularly squeaky clean score, and you want to be in the virtue signaling class of 2023, then, well, the best thing to do is to find other squeaky clean ESG companies that are that are social washing, greenwashing, every washing they can to make them look like they're the best company on the block. They don't do polluting stuff. They, diversity hire up the wazoo just to make sure, and they're making sure that everybody who has a psychological wound is getting taken care of. Then I plug that into Aladdin. It tells me a bunch of companies that have been lying about how they're performing, and it tells me to buy those companies. Okay, because how the heck can you do all this ESG stuff and actually maintain a profit is beyond me, unless you're getting huge sums of money socked into you, and at some point you're just going to fleece the people who are putting money into your pension fund anyhow. But hey, let's not confuse the issue with facts. So, the Aladdin software, some of the specific features of it, provides portfolio management tools. So, allows users to analyze and optimize their investments across asset classes and geographies. Risk management tool includes a range of risk management tools that allow users to monitor and manage risk at both the portfolio and the security level. So, great. So depending on what I configure with the system, I can have particular companies that are little, they're not up to their appropriate ESG scores, so I don't want them in my portfolio. Okay. All right. So I can make sure I don't invest in those companies. Reporting and analytics. So just, ability for it to roll up the particular configurations that I have, give me reports and tell me which companies that I want to invest in, and if just say any material changes to a company's ESG score, for example, if that's the big thing I want to trade on. If that comes up, then my monitoring tools will tell me that this company is invalid. Kind of like that movie, was it Gattaca, where the if you got the wrong genes, then you're considered an invalid and you're not part of upper society. Yeah, so it's essentially like that. You basically got the incorrect ESG DNA within your company. Therefore, the investment tools are going to say, do not fund them. So if they have a big project that they want to get off the ground and they go to either bonds or equities for funding, or flat out loans for funding, and you're a pension company that wants to, you'll give them the loan, but then I'll create some yield and then give that back to my pensioners. But your big thing goes bleep, bleep, bleep. This company is invalid. Its ESG score is, I don't know, 250 out of 900. Red alert, red alert. Um, they suck oil out of the ground. Shame on them. So that's basically going to tell you that if, just say my company has exposure to something like oil drilling or oil exploration, for example, and you want to fund me and I got a big project I want to do, hey, I want to build a refinery. You are dirty, do not fund them. Okay, well, that, and if all these companies are getting on the ESG bandwagon, because heaven forbid that somebody calls out someone's CEO over social media for not following particular ESGs, then well, hey, you don't want to get pilloried by the blue check Twitteristas. Of course, now you just buy blue check for $8. So Elon took care of that problem. All the anointed lords and ladies and others who mark X under others will then say, "Oh, we are Legion. We are the rulers of the Twitter. We don't like you. Shame, 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 shame." And so you get the Twitter wall of shame comments against your CEO and company. And then because everything is so intertwined, the trading algorithms will see that and say, oh, you reached the threshold of pillorying this on Twitter. So therefore, we're going to start to tank your stock. And at the same time, your Aladdin system turns around and says, yeah, we don't like you as well. So next thing you know, people are no longer funding your company. So the other thing that Aladdin does have is it has artificial intelligence built into it. Potentially, allegedly, that it has an artificial intelligence exposure that is beyond what Chat GPT can do, and it's optimized for trading. So, what you might see in kind of the war on the ESG side is on one side of the fence, you might have companies that want to just get away from the ESG thing. If you want to lose, if you want to make money, then find companies that are doing things in a meritorious style way. But if you want to virtue signal and jump onto the virtue bandwagon and throw money at virtuous green washed companies and whatnots, you can put your money into the ESG side of things, and the AI software will review your portfolio and show you things like, hey, look, here's value at risk. Here's some stress testing and scenario analysis on your portfolio based on the defined criteria, especially if, again, if ESG is an important dimension that I need to weigh my modeling on. And should that happen, then what we might see are companies that are going to divest themselves or start pulling apart their business units that are pulling down their ESG scores in the hopes that the ESG souring part of the company can go away, and then the righteous side of the company can get uh, all of the funding. So what this can set us up for are companies that no longer really do want to move towards shareholder capitalism. There is, if you follow any of the globalist Davos agenda, it is all about stakeholder capitalism. I have to make sure certain parties have their appropriate, um, I have to say my appropriate prayers to the green people, the cosmic justice people, heck, no religious people. Oh heavens, don't do that. That will just slam your ESG score down so low. And so once you do your protestations to these particular entities, then the funds will flow, much like the spice. So, kind of the in summary here is, yeah, BlackRock has a very large trading platform. They have a system that gives you AI powered ability to make uh, trading decisions, and as potentially this AI starts to learn that it's potentially and allegedly, I don't know, but it may start to tell you where you should put your money, because we know based on what Elon's saying, AIs can be biased. So if the AI says you got a very bad company, then all of a sudden you can see the people who fund your company backing off. And if you ask why they're backing off, they just kind of show you the computer and says, computer says I should back off. So interesting future. And then whoever's behind, whoever owns the code, or whoever controls the code controls the future. And we're going to see that in tunes of trillions of dollars. So strap in, folks. Bohica.